The CPI data is out and it is exactly in line with what the market was expecting, and we've seen a pretty muted move in comparison to some of the CPI prints that we've had here over the last couple of years. So far pre-market, we're down a little bit less than 1/3%, so a very small move in comparison. Now, what we're taking a look at today is volume profile. And so on the side of the screen, we have the amount of shares traded at particular levels here for the S&P 500 over the last 3 years. And what we'll notice is two things. The majority of the volume, or the biggest area of volume, is right here in the middle of this zone. That's a big battleground area. And then the second most important zone is right where we're kind of trading at right now. The reason why this is important when we look at volume profiles shows you the amount of shares that traded hands at a particular level. When you have a lot of people trading shares at a particular level, there is a lot of memory around that price, and it becomes essentially a major battleground zone, right? Sellers will defend that level, and buyers, they want to see it break above. So if we're above this price, buyers essentially have won, and you might get a lot of shorts covering. And if we stay underneath of that level, you might get shorts that are being more aggressive, and you might get buyers that finally throw in the towel and say this isn't going to happen. So what happens here is extremely, extremely important. This 4,100 to 4,200 zone is where we've traded for the last couple of weeks and on the S&P 500. The winner of this is going to determine our next move. We're still trapped inside that range, but as you can see from the volume profile, what happens here is absolutely key.